This is dumb. He's surrounded by sycophantic idiots. And this just needs to stop. As a podcast, we want to focus on startups. And I think we should also focus on truth telling. And this is just dumb.
You're listening to the Startup Podcast. This is a Reacts episode.
Hey, I'm Chris Saad.
And I'm Yaniv Bernstein.
And on today's show, we're going to talk about what else? Tariffs. Tariffs everywhere. Trump's new Liberation Day, tariffing the whole world. What has it done to the stock market? But more importantly, what does it mean for you, your startup, and your tactics moving forward? We're going to help give you some insight into that. Maybe it's a little bit of bewilderment as well. We're also going to talk about Shopify's new AI memo. The CEO over there shared a memo helping employees understand what they should be doing with AI and how they should react. And we're going to break that down, explain what it means, and also talk about what it means for your startup as a solo founder or as an early stage company. All that, much more on this week's show right after the break. Stay tuned.
Whether you're starting or scaling your company's security program, demonstrating top-notch security practices and establishing trust is more important than ever. Vanta automates compliance for SOC 2, ISO 27001, and more, saving you time and money while helping you build customer trust. Plus, you can streamline security reviews by automating questionnaires and demonstrating your security posture with a customer-facing trust center, all powered by Vanta AI. And it gets even better. Just for TSP listeners, you can get $1,000 off Vanta when you go to vanta.com/TSP. That's VANTA.com/TSP for the Startup Podcast to get $1,000 off.
All right, let's jump straight into it.
Unless you've been living under a rock the last few days, you will know that on April 2nd, Donald Trump went into the White House Rose Garden and announced Liberation Day, which was a display of poor mathematics, poor understanding of economics, US arrogance, all in the service of starting a trade war with the whole world at once. So this was the event at which Donald Trump put tariffs on basically every country in the world except Russia and North Korea, strangely enough. Who knows why? What we want to discuss today is a little bit about, how this affects the economy in general, but really zoom in, Chris, on what does this mean for startups? If you're a founder, we've suddenly got a whole lot of economic uncertainty. The potential for a US recession is going through the roof as a result of this. So how do we navigate this incredible uncertainty and volatility?
That's a really great question, Yaniv. How do we navigate this radical uncertainty? The problem is that there's uncertainty about the uncertainty, right? Because we don't know if the tariffs are going to stick. We don't know if they're just a negotiating tactic. We don't know if they are a negotiating tactic, what they're negotiating to. We don't know if he just likes tariffs and he wants them long-term so that he can incentivize manufacturing to be moved onshore. We don't know what this reconfiguration of the global economic system means, whether the tariffs stay or not. What does that actually mean? Because it's a grand experiment on a global scale. So it's a sort of an uncertainty on top of uncertainty. Even if tomorrow they're fully reversed, I think the damage in terms of reputation, trust, hedging, and so on by the rest of the global community will be irreparable for the US, or at least will take many years to unwind. What does it mean to founders? It's in an era of uncertainty, you need to deliver efficiency. That's the superpower of startups, of software, of AI, is to be able to help companies do things with more efficiency, less costs, and less dependency on people and countries. And so that you have to rotate into that messaging and rotate into that reality and rotate into a team that can help you execute that, because otherwise you can't afford to burn dollars, time, and bad decisions and just kind of in a middling success.
I think the thing is, you talked about all the uncertainties, and I agree that there's just a huge amount of uncertainty, but you ended with something that I think is as close to a certainty as one can get, which is that this is not good for the global economy, right? There's a question about how not good. But like you say, even if the tariffs are reversed today, a lot of damage has been done, right? And, we're not talking about stock markets being down as such, although I'll come back to that. But we're just talking about, like you said, the loss of trust, the kind of already the reconfiguration of certain things, the slowdown, loss of consumer confidence. It doesn't just bounce back straight away. But let's talk about the stock market and what it means for founders, right? Because we've touched on this before, Chris, but I think at one level you can say, well, we're an early stage privately, we're a privately held company. What do the public stock markets matter to us? And I think the magic words here are multiple compression, right? Now, what does that mean? In general, when you look at the stock market or at any individual stock, you can look at it with both views. You've got this concept of an earnings multiple, right? So at what multiple of the annual earnings of a stock or of the overall market is that market trading at, right? So if you're earning $100 million a year and you're valued at $2.5 billion, that's a multiple of 25. Now, historically, multiples tend to be around 20. Prior to this latest crash in the US, multiples were hovering around 28. Now, what does that say? That says there's a lot of confidence. It means that the stock markets are high by that measure, which is really a pretty good measure, right? That valuations are rich, and it shows a lot of confidence about the future. It's saying we're willing to pay more now because we believe there's going to be a stable economy, there's going to be ongoing growth, and so that sort of future discount is lower and we're able to pay more now, right? That's what a high multiple means. Now, no matter what happens, to my point, Chris, it is likely the case that multiples on US stocks are going to be reduced, right? They've already been reduced. They're still not cheap, right? I think multiples are now around 25 in the United States, but they're likely to reduce. And the more to the point, they're likely to stay lower, right? Because what I'm saying is true, which is that stock multiples and market performance are to a certain extent a vote of confidence in the future, that level of confidence has to have gone down, right? Like we've got somebody in the White House who is just completely unpredictable, and whether he, revokes the tariffs or keeps them forever or starts a trade war or ends a trade war or whatever, we just don't know. The uncertainty's gone up, and that is a permanent tax on stock prices. Okay, so what that means, Chris, is I think multiples are going to be lower for the foreseeable future, and they could be a lot lower, right? Especially if the economy itself suffers, which is not unlikely, right? If you're a startup, this goes back to VC maths, and we've talked about this before, right? Which is the valuations that you get as a startup are somewhat based on the VC or the investor's calculations on what their exit value will be, right? So they're like, okay, I'm investing in Series B at a valuation of $50 million because I think there's a 20% chance this will exit at $1 billion, and my fund maths works out at that level, right? And we think it's going to exit at $1 billion because we think it'll make X money and it will attract a 25X multiple on revenue. Okay, now if that 25 goes down to 20, the exit valuation will go down, and then that maths will cascade backwards all the way back to the earliest stages, right? So this is what we mean when we talk about multiple compression affecting startups. If investors think that their exits are going to be smaller, then they need to reduce the valuations that they invest at by the same amount, right? And so that affects you as a founder. You will not be able to raise at the same sort of multiples as you may have been able to do just a couple of months ago because of this. And it's a damn shame, Chris, because we were just coming out of this sort of inflation-related kind of loss of confidence. And we were really starting to see, a lot of green shoots and the market unfreezing a bit in terms of, early stage venture and so on. And I think this just throws us right back into that uncertainty and makes things unnecessarily difficult for founders just when things are starting to look better. In general, you've talked about efficiency and AI and all of that, and that's true, and that's good advice in general. But I think there's another more tactical thing, which is if you're a startup and you are relying on sales into the US, right? And this is quite common. I've seen a number of startups saying, oh, their sales cycles are slowing down, especially if you're an enterprise and you're selling to American companies. These companies are in response to all this tariff stuff, they're just hold off on everything. We don't know what's going to happen, right? This is why it's harmful, by the way, right? This is how these things can become self-fulfilling prophecies of economic slowdown. Everyone's holding off on making purchase decisions. And so, when we talk about reconfiguration, it's okay, selling into the US, you're less likely to be able to hit your targets. You're less likely to be able to make the sales that you were expecting to in the US. And so when we talked about global reconfiguration, the local reconfiguration for a startup is, maybe we should explore markets other than the US who are going to be more reliable trading partners. So yeah, how do you think about that, Chris?
Look, the US is still the largest, richest economy with it's the most target-rich environment. And if you're selling B2B SaaS or consumer, whatever, you're still going to sell into the US. And I don't know how much, if tariffs affect you or not. I don't know how it applies to software or, SaaS or services. But at the end of the day, what Trump's betting on is you're going to still sell into the US. And he's like, we're the biggest market. We're we got the best currency or one of the best currencies. Fuck you guys. We're gonna whip the world around and just bully everybody. And so I think if you're a startup, I think you still want to go to the US because Europe is a hodgepodge of nightmare of different just jurisdictions. Southeast Asia, their currencies are weak and there are also many different jurisdictions. You're not going to sell to Russia. You're not going to sell, Australia's tiny. Like, I mean, where are you going to sell? You're going to sell to the US. And so it's so hard to say what you're really going to do. I think what you end up doing is you're just going to have to hold onto your ass and wince and like just hope that this shit clears up real quick. That's what you have to do.
Yeah.
To keep your head down, and you have to like execute well, execute great, make great decisions, and just come out the other side when this guy becomes a lame duck, gets fired, goes to jail, decides that the stock market can't tolerate anymore.
Fingers crossed.
Billionaires rock up at Mar-a-Lago and tell him to pull his finger out of his ass. Whatever happens next, you're just going to have to hope that it happens fast so that you can navigate through.
Yeah, you're right, Chris. Like in a sense, we're trying to provide good advice here, but ultimately it is just batten down the hatches, right? It's the same as any other economic shock. Like it's really frustrating at a personal level politically, right? Because it's a complete own goal. It's completely unnecessary economic shock. But yeah, gray clouds are on the horizon, right? And you just got to prepare for that.
Yeah, and then if as the audience detecting any ambivalence in my voice, it's sort of like we're trying to. Yaniv and I have a promise between us to like not make this about the general politics or personal feelings, but it's like it's just so dumb. It's so dumb, and the people trying to justify it are so dumb, and they're trying to kind of convince the rest of us that we're dumb and that there's some three-dimensional chess going on, and it's not any of those things. It's just dumb. And what smart thing can you say about a dumb thing? And this is the thing I'm actually struggling with the most, Yaniv. There's all these hot takes on CNBC and All In podcast and all this sort of stuff. And they're all kind of sitting around the table trying to use all this sophisticated language about, back end of the curve and the front end of the curve and this and the refinancing and the whatever, the bonds and the... And I'm just like, guys, someone just say the truth. The truth is, this is dumb. He's dumb. This is dumb. He's surrounded by sycophantic idiots, and this just needs to stop. And I think as a podcast, we want to focus on startups, and I think we should also focus on truth telling. And this is just dumb.
Yeah, this is dumb. Like this whole like 6-dimensional chess thing drives me nuts because it's like, to me, it's like astrology or something. It's like, yeah, sure, you can discern patterns in random movements, right? Sure, but like, the amount of credulity you have to have, or the amount of Kool-Aid you have to have drunk to really believe that this stuff is 6-dimensional chess rather than exactly what it looks like, which is some combination of just narcissism, stupidity, and, potentially being a Russian asset. I'm going to put that one on the table because, like, frankly, there's more evidence for that than any of the conspiracy theories that have been floated from the Republican side of the table. Some combination of those things have the greatest explanatory power. And there's the old Occam's razor, right? The simplest solution is usually the correct one. And so 6D chess is sure as hell not the simplest solution. You would have to be pretty far down that rabbit hole of MAGA to believe that what's happening here is a brilliant strategic move rather than what it is, which is just wanton destruction. Let's go back to what we were talking about, which is, when times are tough, then what you want to do is be really lean, really manage your costs, give yourself a bit more wiggle room, a bit more runway. And I think this is sort of a good segue to the other thing we wanted to discuss today, right? Because like, obviously we talk a lot about AI on this podcast. I think like when we're looking at actual changes in technology in the startup space, it's so much about AI. And like AI can be a really powerful way of managing these costs, right? And so the other story, which I think is sort of like a good jumping off point and a good bit of a sort of read on the zeitgeist, is that a couple of days ago, Tobi Lütke, who is the founder and CEO of Shopify, put out a company-wide memo about the use of AI at Shopify. And I thought maybe I would just sort of read a couple of the highlights of this, and we could sort of talk about, how things are changing because of the availability of these tools and how you should be thinking about this in your startup. So Tobi listed 5 expectations of Shopify employees, basically around AI. The first is using AI effectively is now a fundamental expectation of everyone at Shopify.
Yeah, I can't tell you the number of people I interact with on a daily basis in my advisory work and fractional executive work who are still kind of reaching for AI last instead of reaching for AI first. And they're still a little like jittery about, well, what do I ask it? And, can it really help in this situation? And it's a little bit shocking, actually. Even some people who think that it's a little bit like cheating, or it's lazy, or it's half-assed. Yeah, there really needs to be sort of this, as you're doing this kind of top-down mandate of like, go reach for the AI first. You need to learn how it works. Using it is not a cheat. And you need to get really, really good at it. You're good at using it, good at prompting it. I posted on LinkedIn this post about, hey, if you're still a little afraid of AI, you should really think about it as like this, one of the smartest people a friend who's very compliant. You can ask it for anything. If you give it good context and ask it for what you need, chances are it will know the answer and give you a really great response. And I thought this was a completely banal observation. I thought it was one of the dumbest LinkedIn posts I have ever made. There's nothing controversial or value add of this post.
Oh, mate, you made so many dumb LinkedIn posts. What you're talking about?
This thing went viral. It went huge, tens of thousands of views, with many, many people commenting like, you must be joking. Please take down this post. This post is so misguided. This is disgusting. And like, people were completely incensed by me simply saying, hey, just think of it like a friend or a colleague, ask it what you need. And they were upset that I was anthropomorphizing it. I was oversimplifying that I called it one of the smartest people, it doesn't know everything. It lies, it hallucinates, and it doesn't know it. It's like, my God, like, relax. It was a simple metaphor to try to humanize the idea, to get people to try the thing. And I just think this is entrenched in a lot of legacy companies around the world. And so, if you're listening to this show, you're probably not one of these people, but certainly your colleagues might be, or, larger companies that you're dealing with might be in this boat. So it's a really good first point to lead with for the Spotify CEO.
I think there's a couple of things to break apart there. So yeah, first of all, what you're talking about is what I've started calling AI cope, right? There's this sense of like, people don't want AI to be able to change their jobs, right? And they're not comfortable with either the technology or the implications of the technology or whatever. And so, they go from like, wanting to push back against the hype, which is reasonable. There is a lot of hype. AI is not capable of everything that people say it is, but they go too far and they say, everything that people say AI can do that is, fundamentally going to change how things are done. I don't buy any of that, right? And, they'll reach for desperate examples to prove that AI isn't that clever. And, I call that AI cope. And it is a really dangerous thing to do, right? Because burying your head in the sand is not going to be the way to succeed. And Tobi mentions that, in this point 1, he says, frankly, I don't think it's feasible to opt out of learning the skill of applying AI in your craft. You are welcome to try, but I want to be honest, I cannot see this working out. So, I think that's the point. He's like saying, no AI cope here, right? And more than that, using AI effectively is a fundamental expectation of everyone at Shopify. And so the second point I wanted to make about that is this is about learning, right? And I think that's something that's sort of changed a little bit, right? In this moment, is that a key part of everyone's job is really about going back and becoming a student and learning, because nobody knows how to use AI effectively out of the box, right? And that technology is constantly changing and evolving and improving. So even if you knew how to use AI effectively yesterday, it doesn't mean you know how to use it effectively today. And so, we sort of talk about the learning mindset and so on. I think that there's been an element of that, but it's been a bit lip service, right? Like, I don't think anyone really minded if people didn't invest in their learning as long as they could do their job well. But when there's this period of rapid change, learning becomes a core part of the job. And I think that is what Tobi is saying in this memo, is effectively learning how to use AI is part of your job expectation, right? So if you don't know how to use the tool, that's on you. You need to make sure that you do that well. Over 7,000 global companies like Atlassian, Dovetail, FlowHealth, and Quora all use Vanta to manage risk and prove security in real time. Why aren't you? Get $1,000 off Vanta when you go to vanta.com/TSP. That's VANTA.com/TSP for the Startup Podcast to get $1,000 off.
So his second point here is AI must be part of your GSD prototype phase. I assume it's get shit done.
I would assume so.
It's part of the prototyping phase.
This is an internal memo, so yeah, it's not explained.
That's right. So your project should be dominated by AI exploration. Prototypes are meant for learning and creating information. AI dramatically accelerates this process. You can learn to produce something that other teammates can look at, use, and reason about at a fraction of the time it used to take. So he's saying, stop talking about it, start prototyping it real quick with AI, and AI should be part of your prototyping phase.
Right. And this is, by the way, like this is what I would call a mandate, right? So this part of the memo is a mandate. It's saying you must use AI as part of your prototyping phase, not you should or it's a good idea. It says AI must be a part of your prototype phase. So again, what this is doing is with a pretty strong bit of top-down pressure to say that whether you think it's helpful or not, you have to show that you're doing this, right? This is how we do things now. And this memo has been compared to Jeff Bezos's very famous API platform memo from the 2000s over at Amazon, where he basically told every team that they had to build an encapsulated service with an API that could be the only interface between their service and the rest of Amazon, right? And basically it's like, if you don't do that, you're fired. And there's a bit of that element here as well, right? It's like, I'm not asking, I'm telling you, you must use AI as part of your prototype phase because it is that powerful. So again, these things build on top of each other. You need to learn how to use it effectively, and then you must use it, especially in that prototyping phase.
Yeah, I mean, this is, to my mind, a bit of an extension of the first one, right? Which is you have to learn how to use AI in your craft. Well, one of the ways of using it in your craft is to prototype things rapidly, whether you're in product or engineering or marketing or sales or whatever. This is one of the ways that you need to learn how to use it well and rapidly. It's in my experience, people sort of reach for other things first for whatever reason still to this day. And yeah, I just, a quick prompt and it'll get you on your way. I'll admit, actually, I haven't done enough of some of this. There's v0.dev that,
there's heaps of them.
Yeah. And I need to get better at this actually. And so, there's a lot of vibe coding going on, a lot of prototyping going on, and it's just a lot easier now. We need to all get on top of this.
That's right. And that's the point of the mandate, right? Is it's uncomfortable. And so sometimes you just got to make people do things, right? And that is what Tobi is doing here. By all reputation, a very nice guy, but this is sort of the hard core of him where he's like, yes, you must do this. The word must, I think, is very deliberate. Okay, number 3. We will add AI usage questions to our performance and peer review questionnaire. So actually, I'll read the rest of this one because it's really interesting. And it touches on what we've already spoken about, Chris. Learning to use AI well is an unobvious skill. My sense is that a lot of people give up after writing a prompt and not getting the ideal thing back immediately. Learning to prompt and load context is important, and getting peers to provide feedback on how this is going will be valuable. So again, what we're saying is learning is now a core skill, right? We've said, thing 1 is we said you have to learn. It's an expectation. Thing 2 is we said, we want to show that we want to see that you're actually using this as a core part of the prototyping process. Thing 3 is saying your performance is going to be measured on this, right? We're going to add this to your peer feedback. So because learning it is not obvious, because it's not easy, because it's easy to give up, we're going to align the incentives. We're going to make this crystal clear. This is part of your job now. Learning this is part of your job, and your performance is going to be measured based on that.
I love the way you recap that because it is definitely building on itself, right? The first one is, hey, you should probably take a look at this. The second is, and you should definitely use it for this part of your job. And the third thing is, and we're going to make sure you're using it and learning in that. I guess we're going to put it in your performance review. And so this is really not a suggestion as just as a masterclass in how to roll things out in your company. If it's not in the performance reviews, it's not real. If you change the cultural values, but you don't change your performance review rubrics to reflect your cultural value change, that's not a change in cultural values. So yeah, this makes a lot of sense.
Yeah, so that's right. So those are the first 3. There are 5 points in this memo. And as you said, these 3 build on each other. Now, the next 2 are a little bit different, right? So the 4th one says, learning is self-directed, but share what you learned. So this one doesn't have as much of a hard edge, but I think is really important, again, that, there's this collective learning going on. When things are moving this quickly, it's not a question of, everyone, there's a manual that you follow and, there's a course that you do and you learn your AI skills and then off you go. We're all learning together. And the way that we accelerate the organizational learning is by not trapping every person's learnings in their silo, but aggressively sharing both, what works and what doesn't. And this is something that I'm implementing at the organization that I'm currently leading the engineering team for. Sharing is super important when we're, in a sense, pioneers, right? When we're sort of at that bleeding edge, figuring out what works and what doesn't. There is no rule book. We need to figure it out ourselves. The sharing is actually a core part of it.
Well, I mean, I slightly disagree that this is not related to the first three. What he's saying is you need to go do this. You need to demonstrate you're doing it. We're going to measure you doing it. And guess what? We're not going to baby you and spoon feed you and give you professional development projects and courses to do it. You need to just go do it. You're not waiting for somebody to hand it to you. And so I think that it's all building on itself. It's saying you're going to need to go do it, and you're going to do it for yourself, and you're going to help your colleagues do it. Because, implied here is there is no courseware where you can, like, a moment in time, you go learn it, because it's still being figured out. It's changing all the time. And so, I think it's very much, it is sort of the how you're going to get better at it and how you're going to use it for prototyping and how you're going to get performance reviewed on it is by teaching yourself and teaching each other. The fifth bullet is, before asking for more headcount and resources, teams must demonstrate why they cannot get what they need done using AI. And so this is a really big statement, right? This is what we talked about in the last episode, which is maybe there's a little bit of shedding of staff going on, especially in customer support and whatever. But where the real opportunity for companies is to say, how do we scale and massively increase productivity by supercharging every employee with AI? And what he's saying is, we're not going to give you more headcount. These companies all naturally grow, naturally bloat, naturally add headcount. And before you add another head, figure out how to scale with AI. It's really powerful.
So I think this is powerful. This is the one that got the most newsworthiness, because I think the media have decided that, job losses or lowered employment is like the clickbait that works the most. I think this is happening formally and informally across the board, right? And this just makes sense, right? This is automation 101. This is not unique to AI. This is typical of any wave of productivity improvement of automation, right? You're like, oh, okay. So maybe now, regardless of whether we let go of existing people, we're going to be like, can the automation pick up the slack, right? Instead of hiring another bookkeeper, can we put it in Excel, right? So there's nothing new here, but it's a very pointy reminder that AI is a productivity tool that adds leverage to every employee you have. And sometimes you need to break out of that old habit of how we do things and say, okay, let's make sure we're getting maximum leverage out of the tools before we add the most expensive and failure-prone part of the whole system, which is more employees, more humans. Chris, there's something I wanted to do here, which is go through this again and think about how this applies in the context of startups, right? How you should be thinking of it as a founder. And I think there are a few here that are particularly salient. And when we go back to that whole tariff, the economy has a lot of uncertainty around it. This is where, as a startup founder, you can actually really come out ahead, because these mandates are really easy relative to a big organization when you are small and scrappy and getting started, right? So let's have a look at this. Number one, using AI effectively is now a fundamental expectation of everyone at your startup. If you're very early stage, everyone at your startup, well, that's you. You're looking in the mirror. It's a fundamental expectation you should have of yourself. It's a fundamental expectation of everyone on your team, right? That means that it's now a fundamental expectation to spend a significant amount of time learning. There are new tools coming out all the time. There are, advances in the quality of models. If you're not keeping up to date with that, then you're going to miss so many opportunities. You're going to miss opportunities to be more efficient. You're also going to miss opportunities to make your product better, right? Because you don't know what tools are out there that can really enhance your product and make it a kind of AI native tool. So, being a founder is a learning journey regardless, but now we're saying, okay, this is a skill you can't afford to skimp on. You need to put the time in. You need to move it up your priority stack and, sacrifice other things, because everything in time management is a prioritization trade-off exercise. This needs to move way the hell up, because if you don't, you're kind of flying blind into this new way of doing things.
Yeah, which brings us to the second point, right? Which is, if you should be using AI to do your prototype phase. And so how many founders are there, Yaniv, in the world who are ostensibly out there looking for a technical co-founder? Now with low code, no code tools, with these new AI generative tools, you should be able to generate quite a lot of functional prototype, of first version, of MVP, that can at least prove out your idea, can get some early traction, can put it in front of some people. And so this second point of it must be part of your prototyping phase, I would say it must be part of your MVP phase. Get something up and running, and waiting for that, that mythical technical co-founder is no longer a good enough excuse. Similarly, if you're a technical co-founder or a technical person, waiting for that marketer, waiting for that web developer to create the web page for you. I'm working with a team where the engineer generated a landing page for the app we're building. He literally gave it just a few words about what we're building, and it generated a roughly right, landing page pretty quickly. Now, I rewrote the whole damn thing, but it was at least something the engineer could have done to move the ball forward. And so, yeah, the second one of like AI should be part of your prototyping phase, should be part of your MVP and your early getting shit done phase for your startup.
Yeah, I mean, I mostly agree. You talked about the technical co-founder thing. I think effective use of AI and technology still requires somebody with a high level of technical skill to really build production systems. But those early stages, Chris, yeah, sure, like you can get a lot more done, right? This is an extension of the sort of the no-code revolution, which is not really a revolution, I suppose, but the no-code movement where you can get more done without having that deep technical expertise. 100% agree. But even if you do have a technical co-founder, they should be able to move way faster, especially in those early stages, because they are leveraging these tools. AI should be a standing agenda item. If you have co-founders, if you have a team, you need to be learning together, right? And again, you have an advantage over bigger companies in a lot of ways because you can learn and adapt much faster. But this is not something you do in a silo where you've got one person who does the AI learning or you're each doing your own thing. It's like, no, this is like a core part of how you're evolving your company. You need to share those learnings. You need to create lightweight processes or forums or whatever it is that you need to do to make sure that that learning is shared every day, every week, every month.
And, it's really popular to build in public these days. So, as you learn and as you build, I've seen a lot of these vanity posts where it's like, oh, I built my startup to whatever million ARR with, 2 people in a smell of an oily rag using these AI agents and whatever. I don't know how much of it is true, and I don't know how long that's going to last or how long
There's a lot of BS there.
People are going to tolerate it. But sharing in public with the fellow startup community and building in public can be helpful here as well.
Yeah, well, actually, you make a very good point. And something that I did want to mention is I think the idea of having learning communities beyond your own startup, especially if you're early stage, is increasingly important. I'm sure that there are a lot of, meetups and forums and so on happening. Consider joining one, consider creating one where there are other founders, other startups who you can share knowledge with, right? Like what's working for them, what's working for you. If you're worried about competition, make sure that those startups aren't in a competitive space to you, but you will all benefit, right? That rising tide will lift all boats if you're able to share that knowledge, what's working for you. So again, I think that extension of learning in a startup is try to engage with a broader community. The final one, I think, is in a sense the most obvious one for startups, right? Which is before asking for more headcount and resources, demonstrate why you can't get done what you need to get done using AI. And this is going back to, the 3-person unicorn idea that was mentioned first on this podcast, as you like to say, Chris. Whether you get there or not, the point is at a startup, you should always be slow to hire, right? You should always be slow to add that fixed high cost of an employee. But now it's like, wow, like I do think at the early stages, you can get away for a lot longer with a really small team. And actually, especially if you do have a technical co-founder, Chris, or a technical lead, they can do a lot of the software building using these advanced tools without having to get a team, without having to outsource it or insource it or anything like that. They can kind of just, them and, a bunch of these tools can build quite a lot. And so the idea of having just the founding team or, just a couple of employees on top of the founding team until you reach a fair bit of traction, I think is more feasible than it used to be. So don't assume, even if you raise a round, right? You've raised your pre-seed, maybe even your seed round. You're like, oh, I'm going to go off and hire a bunch of people. Wait, stop and think. Is hiring people actually the right use of this capital? Is it necessary? And if it's not, then don't do it.
Yeah, obviously, being capital efficient, capital wise is key here. I just want to talk about the risks of overdoing it on this point, because everything you just said is well taken. Everything you said is correct. But there is a class of founder who raises money and then does not deploy it, is still pinching pennies and is still shy about getting shit done and doesn't understand that a big part of startups is momentum and about opportunity cost. And so you don't ever take this advice as like, don't spend. It's about spending wisely, spending efficiently. And also the other thing I want to say that's a bit of a counter argument to this In my experience, AI only works if you know what questions to ask and you ask very, very specific questions, good questions, questions that often require the domain expert in the first place to ask. And so when I ask AI about all the things that I'm an expert on, I find most of its answers to be middling and sometimes nonsense. The example I'll give is the partnerships question. Should I partner with companies to distribute my products? It gives you this nonsense answer. Partnerships can be really valuable for a company because it helps you do blah, blah, blah. But it's like, yeah, go listen to a couple episodes ago where we explained the 10 reasons why partnering with a large partner can be a complete fail. And I cannot get ChatGPT to say that, like to give that list of real, hard, pragmatic truth. I've educated it with RAG. I've given it all sorts of information, and it still wants to talk about how great partnerships are. And so I would encourage you to still find killer executives, killer people with experience, killer advisors, killer coaches who could help you shape the right questions and apply wisdom, not just data and information. And so I just want to make sure that you're balancing your AI euphoria with some gray hair and some experience in the room.
Oh yeah, you absolutely cannot outsource your high-level thinking to the AI. I 100% agree. And there are going to be times, definitely, where you need to hire people, and companies will still get large, right? Humans are really important, but I think it sort of flattens that curve, especially in the early days, right? And your point about not being cheap is well taken as well. And in fact, some of these AI tools are quite expensive, and I would say, well, quite often they're worth spending the money on because the alternative is hiring someone. And, often you can get a lot more bang for your buck from that. But, it's an interesting balance, right? I think I'm definitely seeing startups that can get away with raising less, keeping more of their equity, moving things later while still moving as fast as they can. Because I think maybe the fundamental point is, like in any system, there's always going to be a bottleneck. There's going to be the thing that slows you down. And in the past, that's usually been execution and delivery. I think that can still be the case, but especially at an early stage, the bottleneck is starting to become more often, ideation, discovery, iteration, like that actual high level thinking of figuring out how to get product market fit. The execution bit can be pretty quick, right? And so it's like the resources that you spend, you should be spending more of that, moving that flywheel and getting really good at the ideation and discovery side of things.
All right. Awesome. Yaniv, how can people find you on the internet?
Okay, I am on LinkedIn, trying to beat down the trolls and also just making it a less boring place. So I love getting connection requests from TSP listeners, so please hit me up, let me know that's where you come from, and I will accept your request. How about you, Chris?
I'm on all the social media at Chris Saad or over at chrissaad.com. All right, mate. Good chat as always.
Wonderful. Have a great one, mate.
Today's episode of the Startup Podcast was brought to you by Vanta. Vanta automates compliance for SOC 2, ISO 27001, and more, saving you time and money while helping you build customer trust. Plus, you can streamline security reviews by automating questionnaires and demonstrating your security posture with a customer-facing trust center, all powered by Vanta AI. Over 7,000 global companies already use Vanta. Why don't you? Get $1,000 off Vanta when you go to vanta.com/TSP. That's VANTA.com/TSP for the Startup Podcast to get $1,000 off.